with a 4% move in SPY this week. Is the yen carry trade and fears of recession over? Let's go. Was busy last weekend, so couldn't make a video about what was a flat week. And of course, when you look under the covers, it certainly was a lot more interesting than that. As on Monday of that week, we started at a 4% low, and then by end of the week, clawed our way back to even. And when flipping over the VIX here quickly, we'll get back to SPY in a moment, we see that this tail candle was up in the 65 area, which if you go back through time, this doesn't happen that often. And you'll notice that this week, we closed the week under 15. So fear just melting away in the market, or is more volatility ahead? This is what we're going to try to answer here moving forward. So flipping back to SPY, this week in this area is going to be very important to help us figure out, are we going to go ahead and keep bulling ahead higher, or is this going to be an area either where we move sideways, chewing time off the clock, or just go ahead and start to reverse here, going into what would be a third wave down or a C wave. Drawn a couple fib retraces here so we can look at this area. And just a refresher here, the 65% area is known as the golden pocket, where many times off of that area, stocks will go ahead and reverse off of that area. It's usually a typical turning point for most waves. And we'll notice here that we've gotten above that area, but this 786 area, or a 79% retrace of that downdraft going up, until you get through there, we're not exactly home free. If we look back at last summer, we see that, once we came down to a low and we retraced back up into this 79% area, we then put in a wave 3 week over week here for several weeks until we finally hit and put in a wave 4 and then finished with a wave 5. So right now we're not exactly out of the woods yet. And just due to the nature of corrective waves, and there's so many different type of corrective waves other than zigzags, we could have a running flat where we come back up here and then we come back down, and that would form kind of an ABC there with what they would call a running flat. And then at that point, when we're over here, it could go ahead and then move higher. So with corrective waves, there are many types of waves, so it's tough to speculate what's going to play out. But one thing for sure is, this area is real important. And if we can get above this area, much like we did in the past here, so you can see here that this was just a pullback and we came up. Once we got above this area, then it's blue skies ahead until you hit the next all-time high. Now, this past week, we also noticed that, volume was below average type trading volume, but this is typical kind of summer behavior where you can move higher on low volume trading. But what I find really impressive on this weekly is that even though we essentially had 4 weeks of selling pressure, and then this week really ended up flat, and then now we bounced, even with all that, we've maintained the bullish alignment of the moving averages. So we see the red 50 exponential moving average, the 20 simple moving average there in blue, and then the gold is the 13 exponential moving average, and the exponentials are a faster moving average, so they're weighted more towards the days that are the closest. And then we have the 5 exponential moving average here. And throughout this entire time, they held their bullish posture and they're aligned to the bull side, which basically means that they're stacking one on top of each other without crisscrossing. So that was held. And zooming in here a bit, we see this green line, which I mentioned is a 5 exponential moving average. And we see here that price closed above that 5 exponential moving average. So at this point, even if we go ahead and we come back down and let's say we spike that 5 exponential moving average and run into that 13, we're likely to find support there before just drifting away lower. So expecting that 5 exponential moving average here to act as support on the weekly. And if we flip over to the daily on SPY, we can see here that the green 5 exponential moving average crossed above the blue 20 simple moving average. So this means that we had a trend change. You'll notice that we had the trend change back here, back in the end of July. And once that green 5 exponential moving average crossed below that 20 simple moving average, you can see that we went down. And then essentially when we came up for air, this 20 simple moving average acted as resistance until we went ahead and made the final descent here. So now that we're crossing above with that 5 exponential moving average and we're moving higher, I would expect the first line of defense will be that 5 exponential moving average. And as I've discussed before with that 20 simple moving average on the daily, that this is the bull trend's friend. So even if price is able to start getting rejected here at this resistance area, we're likely to come back and find support of this rising 20 simple moving average, and it won't be long. I think all we're missing here is getting the 20 simple moving average above the 50 exponential moving average, and once we do that, all these moving averages will be stacked to the bull side once again. And being that we've run so much recently, it wouldn't be that unusual to see ourselves ping pong around in this range until deciding maybe to make a break and move higher. And that would form a nice inverse head and shoulders on SPY, and this would be our neckline in this area at the 554. So if we want to get an idea, if we start to break above this neckline with some type of inverse head and shoulder here, the pattern, let's see, it had a drop from the 554 area down to the 511 area. So that's over 40 on the SPY there. So, and if we look at this 554 area, that means you add 40 onto that, and we're pretty much getting close to, well, we're going to have to zoom out a little bit. That means this would want to take us up into the 600 area at some point. I'm not saying in one day. I'm saying as the pattern plays out, maybe this is over the course of several weeks. So if we don't get rejected here and either form a right shoulder that maybe eventually breaks down, or if it breaks out, it's going to go ahead and want to run up to that 600 area. If it goes ahead and breaks down, then we could end up being in a wave 3 downward, and that would be the continuation of some type of either A, B, C corrective wave. That's a larger wave that we can show probably a little bit easier on the weekly, or it could be a 5 wave down like we've seen before on the weekly that I showed prior. And I went ahead and added on the MACD now here so we get an idea of momentum. And you can see here that once we got that trend change where the 5 exponential moving average went below the 20 simple moving average, you can see here that definitely this momentum was carrying us downward. But now that we've seen a cross with the MACD line going above the signal, now that this means the momentum has now shifted to something that's going to be pushing us hopefully higher in price. But like I said, we could either get rejected in this area and form some type of shoulder here throughout time, trap people a little bit higher and move just left to right here. So technical analysis is great, but I always try to think about the fundamentals as well when we're looking at this, because technical analysis works usually until it doesn't, and then you're stuck figuring out, well, what happened wrong here? And usually what happens is we get into a situation like this where the setup can really move in either direction. So flipping back to the weekly, what could cause traders to want to start to lock in some of those profits and prepare for the worst? Well, taking a peek here at the calendar, at 2 o'clock on Wednesday, I don't think the minutes are going to throw anybody into that much of a scare. But on Wednesday, we also have the Jackson Hole Symposium, which is going to start, and that'll be Wednesday through Friday, where essentially the Fed gets to have a vacation at Jackson Hole and pretend that he's talking about what's going on, with interest rates and alike. So, but again, that'll culminate on Friday, where at 10 a.m., Jerome Powell is set to give some remarks. I can't remember. Usually I don't think they take Q&A at that. It's just usually a prepared little statement. I mean, last year's was okay. The year prior, I think he ripped up his speech, and everybody sold off like crazy when that happened, because that just meant that he was going to let all hell break loose with interest rates. But I would imagine that even though volatility has dropped down to the 15 area, let's call it, I would imagine these 3 days and people preparing for the worst and probably trying to lock some profits in over the last, let's call it, couple weeks, because really Monday was a low and then it reversed off that low. There's going to probably, traders going to want to, I would imagine, want to lock in some of those profits prior to him saying something. But at this point, I think the Fed is our friend versus our foe, because his next move will be to cut interest rates at would be the September meeting, which will be mid-September. Flipping over to the Qs, we can go ahead and put in our fib retrace tool as well. And when we do that, we see here that this bounce hasn't been quite as strong as it was for SPY. In fact, donuts to dollars here, it looks like we're pretty much at that 65% golden pocket area, which if we're going to get a reversal would be sort of normal to see one in this area, rejecting off of that. Now, the good news is that if we can get above and break above this 79% area that we see right here and break above that, we can either come back to this 100% area retrace and get rejected and go into some type of running flat situation. But if we break above this area, this is blue sky territory once again, and we'd love to see that, as that would help make all the trades very successful. As for those of you that don't know, on my trading Discord, I go ahead and alert on 76 different stocks and indices, all the buy and sell signals. Just upgraded that a little bit with position sizing as well. So that's a new feature there to help squeeze as much money as you can out of the trades based on their prior success and failures. You know, that is a service I offer. You can check it out in the details of the description. Now, I'd be remiss if I didn't mention that, you know, NVDA to me is the new Apple. It's what's moving the market. And if we look here at the weekly, it shows you that earnings for NVIDIA are at the end of August. Those will be August 28th. So again, you know, a pretty big event there. Is that something that is run so much and so fast? Is a lot of it getting priced in? And, you know, maybe the sales, some of the sales we have seen with some of the other semiconductors haven't been the best. Has maybe some of that buying slowed down, and will that be a reason on the earnings, even if it's good, you know, maybe some of that is getting priced in at this point. And that will certainly move SPY and Qs quite a bit depending on what happens on that event at the end of the month. Flipping over to small caps, this one even looks a little bit weaker than the Qs. But being that this one has been underperforming the whole year, really, I think a lot of people, including myself, were expecting this one to move a whole lot more, and it hasn't. If SPY and Qs decide to take a break, will this one take a turn moving higher in range? So for a while, we see here that back in time, 200 was a pretty solid top of range here. And it kind of went down into the 160 area, and it was ping-ponging around there for almost 2 years. And then once we went ahead and broke out of that range, you'll notice that now kind of come back into the 190 area, and then we ping-ponged around between 190 and 210. So now that we broke through this like 210 area that we call it, and now that we'll say the 210 area, will this one want to ping pong around, you know, maybe up to the 230 area back and forth before moving higher? As let's face it, if the Fed is going to be cutting interest rates, these type of interest rate sensitive stocks really could have a push going into year end, and they really have nothing to do with SPY and the Qs. Qs are related because of the tech influence in SPY, but pretty much none of the stocks that are in IWM are go ahead and play with those in SPY. So this one can move independently. I would love nothing more than this one to start breaking out, as I typically will play the triple leveraged on these. So I'll take TNA instead of IWM. And if this one is going up, let's say 7%, then I'm going to make 21% on that ping pong going up and down. So this is one that I'm going to look forward to if we're able to start to show some clear signs of breaking out. The US 10Y yields, if we look at these and we look at this area that has been a strong area of resistance and support, we can see here now that this thing did get a bounce through this area trying to cling on. Let's see if it comes up for air into this 5 exponential moving average and maybe just goes ahead and gets rejected here. We'd love to see this with the yields, because as the yields drop, this is going to help those small caps, and it will also help the TLT bond trade, which I usually like to trade with TMF. TMF is the 3x leveraged version of TLT, so you make or lose 3 times what it makes. Now, Bitcoin, the ultimate risk asset, it's in the neighborhood and has been in the neighborhood in the past few days of this 60,000 area. And last week we saw a beautiful tail candle here. This wick would usually mean some type of push within the next week here. This doji is a decision type candle, so this is something where we'd like to see this start to move higher off of this tail candle for Bitcoin. And again, if this thing starts to break out, as it's been consolidating for a while, you would hope it would be something like we saw over here, where this puppy just took off. And once this guy gets impulsive, he stays impulsive. ARK in the last couple weeks has put in a 20% move since its low of 37 a couple weeks back. Now it's coming into this 20 simple moving average area. And this is a big test, because to me, if this gets above the, we'll call it 45 area, then that's a strong bullish sign, and that's something that I'd want to make sure that I'm in. Really, when you look at it, I mean, this thing, for the better part of really almost a couple of years, it's been more or less in a trading range. I mean, moving slightly higher, but for the most part sideways. Especially if it's able to break above this purple line here, which is the 200-day simple moving average, able to break out, maybe come back, retest, and then go ahead and take off. This would be something of a sign of beauty here, seeing that, because retesting that 45 area strength and then taking off would be something that I'd want to make sure that I'm on that rocket ship for. And on that note, thanks for joining, as that's all I have for now until the next video, and we'll see you then.